Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the Bitcoin cycle scenarios chart is overdue for an update because so much has happened since the last one. For one, the global liquidity index finally made new highs recently, and if it continues to serve us as well as it has so far this entire cycle, that should mean that Bitcoin still has higher to go. We've also seen a full reset in market sentiment. You can take a look at the crypto fear and greed index, and we're in the middle of the neutral region, not greedy and not fearful. You see something very similar with spot ETF inflows. We're seeing very small inflows trickle in, but you're not seeing big outflows in terms of panic or big inflows in terms of FOMO. So even ETF inflows show us that market sentiment is really calm right now. We're also seeing something very similar in the on-chain data, like with the Bitcoin short-term holder MVRV. You can see it goes from overheated to cooled down, back to overheated, back to cooled down, very similar to market sentiment. And right now it's sitting right in the middle, not too overheated and not overly cooled down either. And last but certainly not least, we're also getting very close to Q4, which seasonality wise is great for Bitcoin and other risk assets. Usually September is pretty rough for Bitcoin, but we seem to have front run that correction in August, and October and November, especially October, tend to be very solid months for Bitcoin and stocks. And based on the price action we're seeing from the S&P 500 right now, looking like it wants to enter a blow off top, it's only a matter of time before that carries over into Bitcoin, in my opinion, because they've been very correlated over the past few years and have both been in strong bull markets since the 2022 lows. But it's important to remember that no matter how bullish things look, there can always be shakeouts and volatility along the way. There can be a headline, there can be a scary economic data print that spooks markets, but I believe our macro trend is higher and that Bitcoin still has higher to go. And this is why Monday's free weekly report was called Brace for Volatility, because as we get later into the cycle, the volatility gets more and more aggressive in both directions because there's more leverage going on and more risk being taken by investors, and that results in these huge swings. So although my base case is that we're entering the final push scenario with a rally into Q4, we have to be open to the full reset scenario as well, where we get some unexpected volatility and shakeouts before Bitcoin re-enters price discovery. But based on what I'm seeing right now, I still believe it's quite unlikely that the cycle is over, which is the main thing we have to worry about as spot holders. So how am I positioning myself for these various cycle scenarios? I have plenty of spot exposure in case we end up getting the final push, but if we do end up getting the full reset, I have some cash to buy the dip and navigate the volatility. And in case there is that small chance the cycle is over, I've already locked in some small profits along the way so that I'm not stuck having to react to any surprises. And I have found that taking small profits on the way up is a much easier way to navigate this market than trying to time things perfectly and sell everything when you believe the exact top is going to be in at the exact highest price. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market, or common mistakes I see so many investors making, especially in the later stages of the cycle, you can check out the Crypto Enjoyers program and community in the video description. But for now, things continue to look solid. Bitcoin is maintaining that range reclaim, just like the range reclaims we have seen in the past. Sometimes Bitcoin comes down and retests that range low before heading higher. Sometimes we just have the range reclaim and it takes off. Hard to know which one this one is going to be. But again, unless you're gambling your life savings on leverage, this shouldn't really impact you much as a spot holder, and what matters more is the macro trend. And speaking of macro trend, Bitcoin is still maintaining its higher high and higher low structure on the weekly time frame, so my base case has to be that we still have higher to go. I'm seeing something similar in terms of where we are in relation to our 200-week moving average. We aren't super extended to where I would be very concerned about mean reversion happening soon, but we're also not incredibly cheap in terms of how far we are from it. But I do expect us to enter that very expensive region before we see aggressive profit taking from long-term holders. and perhaps a cycle top. As for Ethereum, looks pretty solid here, consolidating between its all-time high and the $4,000 range high, and it looks like a bull flag before continuation. It's pretty poetic that this price range was distribution for Ethereum in 2021, and now it's acting as reaccumulation before price discovery, and I do believe Ethereum has higher to go this cycle. We've seen a bit of a slowdown in ETF inflows as it has been consolidating, and something similar with these treasury purchases. However, we're still seeing a decent surge in on-chain activity. We have fees up 35% over the past 7 days, also a 10% increase in active addresses. It's still in the top 3 most used chains, and it seems like Ethereum should still outperform Bitcoin between now and the end of the year. I don't know if it's going to be 75%. My target for Ethereum is the zero point 0.5 Fibonacci retracement and 200-week moving average, which is about 38% higher on its Bitcoin pair. But this performance is also going to depend heavily on what Bitcoin does, because the higher Bitcoin goes, the more room Ethereum has on its Ethereum Bitcoin pair to go higher as well. And perhaps the most exciting thing about Ethereum entering price discovery is that has usually been the starting signal for alt season. We've been seeing pretty high readings on the alt season index recently. It even hit as high as 100 on Friday of last week. This just means that out of the top 50 altcoins, excluding stablecoins, every single one of them was outperforming Bitcoin on a 90-day rolling basis. Now, because this was a very quick spike, I don't know if it was an error in the data, but it is clear that many altcoins are outperforming Bitcoin right now. Maybe you're not seeing them all do a 10x in just a few weeks, but it is nice to see some of that outperformance from altcoins. And we do have Coinbase announcing they're going to be offering 10.8% yield on USDC holdings by tapping into some of the DeFi lending. This is going to bring a lot of inflows into the space, in my opinion. We're also going to see 1.6 billion in lost FTX funds being returned to creditors at the end of September. And if the market is rallying when that happens, I expect a lot of that money to flow back into the ecosystem, which is perhaps one of the reasons why we're seeing quite a bit of strength from Solana and other altcoins as this risk appetite starts to come back. I still expect Solana to head to the 2021 high and the all-time high soon after that. We're still seeing more and more Solana treasuries pop up, like this $300 million sports group that's rebranding to Soulmate and plans to stake their Solana and run a validator. That would put them among the top 5 Solana treasuries, and I still believe this trend has a ways to go before running out. And Solana still looks pretty good from an on-chain perspective as well. We know it's the highest in terms of the fees over the past 7 days. It's also top 2 only after Ethereum in terms of DeFi TVL. And it also looks incredible from a TA perspective because we are above all major moving averages on the Bitcoin pair, and we had a huge range reclaim, which would mean our next target is the range mid and then the range high after that on its Bitcoin pair, which would be great for Solana. But we'll see what happens. Bitcoin is still the best performing on the past year rolling basis, but it's only a matter of time before Ethereum and Solana flip it, in my opinion. And I do believe that happens before this year ends. But the short term is going to depend very heavily on whether this false breakdown from Bitcoin has a quick pullback before price discovery, or if it just enters price discovery now. Again, as long as you're holding spot and not trying to use high leverage, either outcome should be great for holders. I've been getting a lot of questions on this brief dip we saw in the global liquidity index, but because it was so short compared to the prolonged corrections we've seen this cycle, I don't want to put too much weight into it, and I'd rather focus on what comes next once we get past that time period and what the general macro trend is going to be, because I don't expect Bitcoin to perfectly time those corrections, especially when it's such a narrow window. We have been seeing a bit of strength from the US dollar index recently, and these wicks have been pretty reliable. Whenever we get a downside wick, it tends to go up. Whenever we get an upside wick, it tends to go down with very few false signals. So it does look like we may be seeing a bounce in the US dollar index here soon, but we need to see if we see continuation going into next week. As of right now, the market is only pricing in 2 rate cuts for the remainder of 2025 and 2 in early 2026, 1 in Q1 and another in Q2. That's not a lot of rate cuts for the market to look forward to, but we'll keep an eye on the economic data to see how that changes. As of right now, we are in a macro breakout for the global liquidity index, and that's the main underlying trend for risk assets right now, in my opinion. Investors know it's only a matter of time before the Fed ends quantitative tightening and goes back to quantitative easing and increasing their balance sheet. We know the labor market is slowly weakening, but it's not collapsing like you would expect to see if we were entering a recession. There are layoffs happening, but we're not seeing the huge spikes you expect to see if you're entering a recession. Same thing in continuing jobless claims, slowly increasing, but no huge spikes like what we saw going into 2020, the financial crisis, or the dot-com bubble. So the Fed is easing into a slightly weakening labor market, but it doesn't seem like we're going to be entering a recession in 2025. And they're doing it while inflation is still elevated, growth is still positive. Our forecast for Q3 is still positive as well. And risk assets like the S&P 500 and Bitcoin are likely going to front run this and price it in well in advance. So we'll see what happens, but for now, as we look forward, the federal government is still running huge deficits, now getting close to 2 trillion for the fiscal year of 2025, and this trend seems to be getting worse and worse, and there isn't really an end in sight quite yet. Exponential debt growth means exponential money supply growth, especially if the Fed has to start using its balance sheet and stop long-term bond yields from going too high. And exponential debt growth and currency debasement is good for risk assets that we price in fiat currency like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.